the markets in Nigeria anticipates the third quarter earnings season, Adelayo Alabi, research analyst at United Capital, joins me to discuss the outlook for consumer good companies in particular. Ade, thank you so much for joining us today. Maybe you can just summarize for us. Will it get worse than Q2? Q1 and Q2 was pretty difficult for companies in the consumer goods sector. Since then, we've seen the Q2 numbers come out, not exciting at all. GDP growth down to 2.35%. And there is a sense that demand is relatively weak now. But what are your broad expectations for Q3 numbers?
Well, thank you very much, Wale. Honestly, the consumer goods sector, much like the broader market, it's playing out its own story, and we're not surprised. It's just like we expected, If anybody told us that the impact of what happened in 2012 to the sector will resonate till now, we'll probably argue, But it is what it is. Just like the broader market, the consumer goods sector has been struggling. Having said that, Q3 earnings is interesting. Why? Because the headwinds that have occurred since start of the year, they're still very much present. Although some stability with regards to FX means that earnings might get some succor. While our outlook for revenue is a little downbeat, we think relative stability in the naira, as well as active moves by players within this space to see to their FX generated loans, should see better results, slightly better results than Q2.
Okay, but you mentioned the impact of a 2012 event. Can you just elaborate on that? What are you speaking of? Are you talking about the increase in fuel prices here?
Yes, obviously. 2012 was pivotal, because it started with the partial removal of subsidy, like you rightly said, and that followed with a bit of hiking electricity tariff and some flooding towards the end of the year. So while people thought that the impact of those events was going to be transient, it's just kept resonating up until now, pretty much.
Well, indeed, we are seeing the pressure. But where is there relief at all for consumer good companies in your view? Or should we just brace up for a really tough ride over the next few quarters?
For me, basically, I think just like the broader market, 2015 has been a bit of a struggle, just like 2014. And we believe that the long-term story for the consumer goods sector is still very solid. In terms of tactical play, obviously, it's more difficult. And in-house, we have had to tweak our stock selection criteria, to look for the best picks within the consumer goods space. Right.
So what are those best picks? Which stocks do you like in this space?
Well, like I said, what we have done, given the current dynamics playing in the market right now, is to tweak our stock selection policy for consumer goods. It's split into two categories. We have the policy tweak on the cost side and the revenue side. On the cost side, we feel that players in the sector with the size advantage, they will have an edge, because given the rather tumultuous environment, we think they're going to have advantage in terms of negotiation for bulk contracts. We also favor players in the space that are actively involved in the backward integration strategy. And thirdly is players that are actively doing things to ensure that the exposure to dollar-denominated debt, is being reduced. On the revenue side, we tend to favor players that have well-diversified revenue, that cut across different sectors. Obviously, with the new administration in place, we think agriculture and agro-allied, will be favored.
All right, but can you be more specific? Which companies exactly do you think are best suited to deal with the challenges now?
If you look at the point I highlighted, for us, we think flour mill is very interesting. The company has made moves to reduce FX dollar-denominated debt, and obviously the company has also moved from a business-to-business model to a business-to-consumer model. So clearly, and the stock has been really polished. 45% down year to date. We think there's significant upside for the stock over the medium term.
Right. FX has been a big issue this year, and I would just want to hear from you. When you interact with the consumer good companies, what has been their experience? There have been reports that FX has been very scarce, and I imagine that if that is the case, some companies are really struggling to import raw materials, import machinery, stuff like that.
Well, you're right. The terrain is tough, but the sense we get from interacting with this company is that their long-term view on the Nigerian consumer story is very positive. Obviously, except Nestle, who said they now think they overestimated the growth story in Africa. But for the bulk of the players in the industry, basically, they are very positive on the Nigerian growth story. And if you look at it, over the last 6 quarters, the spend on capex, is on the rise,
Right.
which means a lot of players they are just investing ahead of the curve to make sure that when the consumer pocket ease, they're able to take advantage of opportunities.
But has anything changed about how these companies are viewing the northern Nigeria right now? We know that the government's military offensive has been relatively successful. Now we're still seeing a couple of attacks here and there, but nothing like what we saw about a year ago. So has anything changed about how they are viewing the North?
I mean, clearly, the government is taking more proactive steps to stem the tide of attacks, which is obviously cringing consumer spend on goods, obviously. But for our basket, what we've seen is these guys are coming up with more innovative ways to deepen distribution channels, and part of this is to have more on-ground distributors, to make sure they have deeper chains for smaller units. People that understand the local terrain, they kind of have a way to get this product to consumer. Obviously, that is impacting OPEX, but that is the trend we're seeing.
All right, Adelayo Alabi, thank you so much for joining us today. Enjoy your weekend. Of course, he's a research analyst at United Capital.